That's right. Let's move on then. Max Healthcare, they reported their quarter two numbers. Revenues grew ahead of estimates, while margins missed estimates and contracted by close to 200 basis points on a year-on-year basis. My colleague Vinny spoke to Abhay Soi, the chairman and managing director of Max Healthcare, and began by asking him about the growth rate in the existing and the new units for the second half of the year. Let's hear out what he had to say.
So I think the two aspects. One is from ARPOB standpoint, typically the second quarter is the stronger quarter with respect to occupancy, but typically a weaker quarter in terms of ARPOB. So you usually have, because you have more medical, you have more sort of seasonal flu patients and seasonal diseases admissions, more medical admissions, which enjoy lower ARPOB. But so you need to compare it with the same time last year. Having said that, we also had two new hospitals which have been added, this year, which was the Nagpur hospital. It enjoys a lower ARPOB than our overall ARPOB levels, and so does Lucknow, the new addition. So, we will see growth in these ARPOBs as we go along. But having said that, in the current quarter, they would have marginally dragged the ARPOB down.
Okay, so by the end of the year, if you're watching out for in Q4 FY25, what should be the ARPOB number that we would be looking at?
So, I normally stay away from giving forward-looking guidances. But having said that, our ARPOBs are growing at about 8 to 9% with respect to the older hospitals. With respect to apples, newer hospitals also, they're growing at a significantly higher pace in double digits. When we look at acquisitions, we look at return on capital. You could look at smaller cities with lesser ARPOB, but so long as your return on capital employed is 20 to 25%, that's what we seek. We appreciate and we focus on that rather than what the overall ARPOB is. I think what does matter is what is happening to your overall EBITDA in value terms, and that is moving up, and that's moved up quite. Moved up by about 19%, year on year.
Sure. Then, like you were mentioning, the EBITDA per bed also, that has seen a good growth when you compare it on a sequential basis. Why obviously a bit flattish, but I just want to understand a bit more in terms of the scale up for EBITDA per bed for the newer units. What are we expecting there, and how do we see that moving?
So again, the big difference between year-on-year basis, that's same time last year, did not have the three hospitals. One is the acquisition of Lucknow, did not have the Nagpur hospital, and did not have the brand new Dwarka hospital, which is, of course, in the first 3 months, it got launched in July. First 3 months on schedule, it is supposed to, and it did have an operating loss. So all these three things, drag down the EBITDA per bed on an overall basis. But having said that, if I look at it on a like-to-like basis, I think they've been very encouraging sort of double-digit growth in EBITDA per bed.
Okay, like for like, double-digit growth in EBITDA per bed. So that's an interesting point coming out there. What about your occupancy? Good number, right? 81%. I don't think I've seen it anywhere most of the times in the sector when you look at it. But 81% good number, 91% coming in for Nagpur, which is a newer unit. What is it that we are watching out for in terms of occupancy going forward? Especially one for the newer units, something like a Nagpur, 91%. I don't believe that is something that would be sustainable. And what would be the peak occupancy also for your existing units?
So I think, if you asked me this question a couple of years ago, I would have said 75, 76%, but we've learned to sort of operate at 80, 81%. Having said that, this is also, like I mentioned, seasonally a strong quarter. So like for like, I think last year it was 78 or 79%, which has gone up to 81%. Yes, the encouraging part is that it includes the two new hospitals of Nagpur, where, same time last year, the occupancy was 60-odd%. This year, under our hands, has gone up to 91%. I think it went up to 70-odd% even in Lucknow. And as we see additional clinical teams, employment of new equipment and technology, getting better sort of marketing support, providing better marketing support to these enterprises, you will see the occupancy ramp up over here as well. And therefore we are looking at expansions in the very units that we've acquired. Nagpur is already operating at 91% occupancy. Yes, the percentage points may come down by a few when we move into quarter 3, simply because it seasonally won't be such a strong quarter. But having said that, we already are looking at setting up another 200 beds on top of the existing 200 beds over there. 81% is very high occupancy. We can't continually operate over there. Lucknow, again, we're looking at some expansions. Each one of our hospitals, we've been trying to work around this in the coming month of April and May. We are looking at Mumbai, another 260 beds of brownfield come in place over there. Mohali, Punjab, again, operating at 87, 88% occupancy. We're looking at 200 beds coming in the month of April and May. We're looking at 400 beds in our main cluster in Saket. And then next December, we are looking at, which is FY26, we are looking at another 550 beds coming in Gurgaon. So hopefully all of this capacity will, we're already late on it in the sense that, I wish I had this new brownfield capacity come on stream a year and a half back. But nevertheless, it is much needed, and we are looking forward to these brownfield capacities come out in the next 12 months.
Okay, surely waiting for that. But just the number in terms of occupancy, then what would the sustainable level be overall for the company that we could watch out for, in the next couple of years?
Well, sustainable level is, about 80, 81% is as for the high as you can get.
Yeah.
This is midnight occupancy. As you may appreciate, what that essentially means is that, at night when the admissions happen, the occupancy goes beyond 100% during the day.
Right.
Because, the ER admissions at night which happen, these are, like I mentioned, these are midnight occupancies that we talk about.
Sure. Okay, Abhay, I just wanted to update a bit in terms of the integration of the JPA assets and, the timeline, ramp up. What are the plans there? What are the margins that we are watching out from this asset?
It's too recent acquisition. We just acquired in the month of October. I think shortly we should be completing the call and put option and, moving from a 63% owner to 100% owner. It should happen in a matter of days right now. I think once that is done, we are in the process of already integrating the IT systems, augmenting clinical programs, implementing new employing new technology and so on. It is a marquee asset. It is over 18 acres of land. Very quickly, we will be operating 500 beds over there. We've already seen a ramp up in occupancy. I think we are very, very encouraged by what we are seeing over there and the fact that what we can do over there. We're already considering expanding that capacity in the years to come by another 400 to 500 beds. Given the marquee location, the access, and so on and so forth, I think we have no doubt we'll be able to look. I think we've had great results with the two acquisitions we've done, and I don't feel that this one's going to play out any differently.
What about your Dwarka unit as well? Obviously, fairly newer, July 2024. I think we started the operations over there at the company. Just a bit in terms of the losses or break-even point, when should we expect that? Because right now, yes, slight bit of a loss that you're seeing there for the Dwarka unit. What is the expectation?
So I think the encouraging part is that, look, we started the hospital in the month of July, end of July. So you can actually count it August. We've had about 18 crores of EBITDA losses. But I can tell you that this hospital, this greenfield, brand new hospital, will be the fastest break even that we'll ever do as far as the greenfield venture is concerned. So that is the way it's demonstrating. It's a very fast catch up. We're just waiting for some of the empanelments and insurance tie-ups, etc., etc. It happens over 3 to 6 months when you start a new hospital because, by the time you finish your agreements and so on and so forth. But I think we are very, very encouraged. And like I said, this will certainly break even and be in the money before the end of the financial year. But I actually see this as being fastest break even in a greenfield that we've enjoyed. And, we've enjoyed some very, very fast break evens in the past.
All right, that was Vinny in conversation with Abhay Soi of Max Healthcare. It's a bit of a healthcare